I'm Shalini Raj 297989 from Group 6. So Group 6 will be presenting about oil and gas industry, and I will be presenting an overview of Malaysia's upstream oil and gas industry. So a crucial statement that kickstarts the energy production cycle through exploration, drilling and extraction of oil and natural gas. In Malaysia, this sector does not only fuel national revenue, but also creates employment and stimulates various supporting industries such as logistics, engineering and equipment manufacturing. So our country's strategic location in Southeast Asia, combined with its vast reserves, gives Malaysia a significant edge in the regional energy market. So in this report, it focuses on the operations of 9 major players, which are Vallesto Energy, Hibiscus Petroleum, T7 Global, Sapora Energy, Skomi Group, Baraka Offshore Petroleum, Rich Energy, Dilium, and Usma Berhad. So each of these companies has contributed uniquely to exploration and production activities despite facing challenges like fluctuating global oil prices, tightening environmental regulations, and increasing operational risks. So this analysis aims to show how these companies adapt and thrive in such a competitive, ever-evolving industry.
Hi everyone, my name is Muhammad ZAHIN bin RAZALI, my matric number 291800. Today, I will be presenting an overview of 9 major oil and gas companies in Malaysia. This company play a crucial role in the country energy sector, providing service from drilling to exploration and production. First, Vallesto Energy. Vallesto Energy specializes in offshore drilling, operating jack-up rig for clients like Petronas, known for safety and efficiency. They are key players in Malaysia upstream sector. Next, Hibiscus Petroleum. Hibiscus Petroleum focus on exploration and production. They acquire mature oil field, the North Sabah project, and boost production through advanced recovery technique. Next, T7 Global. T7 Global provide engineering and construction for oil and gas project. They are also diversified into aerospace and renewable, showing adaptability in changing market. And next, Sapura Energy. Sapura Energy is a giant in integrated oil field service, operating globally. Despite financial challenge, they remain a major contractor with a strong engineering division. Next, Skomi Groups. Skomi Group made special equipment for drilling. They also built monorail before. Now they have money problem and try to fix it. And the next company is Baraka Offshore. Baraka work underwater to install pipe and feed oil platform. They also have money problem but still work with Petronas. And the next company is Rich Energy. Rich Energy produce oil in Kazakhstan. They start as a special company to buy oil field. And the next company is Dilium. Dilium feed machine and oil well. They work with big company like Petronas and Solar Turbine. And the last company is Usma. Usma use technology to help oil well produce more. They also try to new thing to like clean energy. For conclusion, these 9 companies do different job in oil and gas. Some drill, some find oil, some fix machine, some have a money problem, but all are important for Malaysia oil and gas industry. Thank you for listening.
Good day everyone, my name is KALIDAS and my matric number is 299111. So today I will be presenting on the topic of market structure in Malaysia's oil and gas industry. In economics, market structure refers to how companies are categorized based on the nature of the product they offer and the external factors that affect their operations. So there are 4 main types of market structure: perfect competition, monopolistic competition, oligopoly, and monopoly. Now let's explore the market structure of several oil and gas companies in Malaysia. First, we have Valesto Energy Berhad. Valesto operates in an oligopolistic market. This is because only a few companies in Malaysia own jackup drilling rigs. Valesto is one of the key players and is well positioned due to its Bumiputra link status, which aligns with Petronas policies. In 2024, its total assets was 3.7 billion ringgit and revenue was 1.3 billion ringgit. Next is Hibiscus Petroleum Berhad. Hibiscus is a part of the upstream sector. It competes with a small number of local and international companies. While it is a price taker, Hibiscus plays a crucial role in exploration and production. So in 2024, its total asset was 6.6 million ringgit. Its revenue was 2.72 billion ringgit and total production was 32.22 million barrels of oil equivalent. T7 Global Berhad works in the equipment and service segment of oil and gas. This segment is partially monopolized, but the T7 is recognized as one of the few local companies with capability in early production and field development. So in 2024, its total asset was 2.1 billion ringgit and revenue was 648.3 million ringgit. Sapura Energy Berhad is one of the top players in Malaysia's oil and gas industry. It operates across upstream and midstream services. The market is oligopolistic, dominated by few companies including Petronas and Sapura itself. So in 2024, it produced 2.1 billion ringgit in total asset and 2.7 billion ringgit in revenue. Skomi Group Berhad operates under monopolistic competition. It provides both oil and gas service and transport solution but has limited influence in the industry. The market is fragmented with many competitors. So in 2024, its total assets was 2.7 million ringgit and revenue was 2.2 million ringgit. Baraka Offshore is a niche contractor in offshore pipeline and installation. The industry is oligopolistic because only a few players have the necessary equipment and vessels. In 2024, its total assets was 141.16 million ringgit and revenue was 133.88 million ringgit. Rich Energy participates in exploratory oil market which are oligopolistic. The company plays a minor role in the industry and doesn't influence market price but offers exploration exposure to investors. So in 2024, its total assets was 455.13 million ringgit and revenue was 208.67 million ringgit. Delum Berhad operates in monopolistic competition. It specializes in turbine packages and niche service. Although it faces same competition, Delum is a preferred supplier for Petronas in specific segments. In 2024, its total assets was 557 million ringgit and revenue was 907.48 million ringgit. Lastly, Uzma Berhad also operates under monopolistic competition. The company offers services like well and production solution, subsurface analysis and geoscience services. In 2024, its total assets was 1.52 billion ringgit and revenue was 600.35 million ringgit. So, in summary, Valesto, Sapura, Hibiscus, Baraka and Rich are oligopoly. Skomi, Deluma, Uzma and T7 are monopolistic competition. So each company plays a unique role in Malaysia oil and gas sector influenced by their market power, asset size and specialization. Thank you.
Good day, everyone. My name is Dharshanaan Jeeva, and my matrix number is 299166. In this section, I will be discussing the strategic behavior of key firms operating in Malaysia's upstream oil and gas sector. Strategic behavior refers to the action taken by the firm to achieve long-term goals and gain competitive market advantages. This includes their approaches to pricing, marketing, research and development, vertical integration, as well as mergers and acquisition. All this behavior align with the structure conduct performance model, a core concept in industrial organization. Let's now look at how each company implements these strategies in real market settings. Starting with Valesto Energy Berhad, the company focuses on offshore upstream drilling services. It adopts market-based pricing, which is adjusted to the complexity of each project. Valesto strengthens long-term client loyalty through reliable performance and brand trust. The company prioritized the investment in advanced drilling technology to improve both safety and performance. While operating under strict health, safety, and environmental standards, its full vertical integration gives its control over operations. And Balesto is actively exploring mergers and joint ventures to meet its 2030 targets of 2 billion in revenue and above 10% of return on capital. Next, we have Hibiscus Petroleum Berhad, which is a key independent player in exploration and production. Its strategy centers on acquiring the optimizing producing oil field, targeting up to 50,000 barrels per day and 100 million barrels in a reserve by 2026. It uses a flexibility benchmark linked pricing and known as transparent communication with investors. A major strengthens lies in its R&D, especially in enhanced oil recovery, digital modeling, and low carbon solution. In 2024, Hibiscus are expected to region footprint by acquiring the Total Energies EP Brunei, further aligning with Malaysia's Competition Act of 2010. T7 Global Berhad offers integrated upstream services ranging from offshore production to decommissioning. It engages in full value chain participation, combining custom engineered solutions with value-based pricing. Its strong client partnership and commitment to innovation are supported by in-house R&D division with initiative aimed at energy efficiency. T7 also demonstrates the vertical integration with its fabrication yard in Kemaman and its target a 10% energy reduction in 5 years. Notably, it has participated in M&A activities such as bidding for 49% of Perkov Tanjung Sendram Berhad, now turning to Sapura Energy Berhad, a global player with cooperation in 20 plus countries. Sapura provides an end-to-end upstream solution including exploration, construction, and decommissioning. It uses project-specific pricing to remain competitive in tenders. In 2024, Sapura divested in stake in Sapura OMV to Total Energies for over $705 million, a strategic move to improve financial sustainability following a 3.2 billion net loss. Sapura's marketing emphasizes safety, innovation, and performance. The company fully complies with the Competition Act with no recorded cartel involvement. SCOMI Group Berhad operates in both oilfield services and transportation engineered across 21 countries. Its value-based pricing strategies reflect the service complexity and quality, while its international footprint boosts brand equity, especially in India, Brazil, and China. SCOMI invested in R&D integrating AI and digital twin technology for predictive maintenance. The company is vertically integrated, managing a services from design to operation, and has formed a joint venture with Zuha System for a rail MRO services. It is also venturing into renewable like solar and wind energy. Next, Baraka Offshore Petroleum Berhad focuses on offshore pipeline installation, topside maintenance, and EPCC projects, known for flexibility and innovation. Baraka formed a strategic partnership with Ocean Installer of Norway to enhance its deep water capabilities. The company is involved across the entire value chain, offering integrated services from engineered to decommissioning. A key achievement is its 5-year farm-in agreement with IPC Malaysia BV. Baraka's sustainability framework is based on 4 pillars, which is workplace, marketplace, environment, and community. It strictly complies with both local and international anti-competitive laws. Rich Energy Berhad holds the Emir Oil concession in Kazakhstan, covering 800 square kilometers. Its core focus on exploration, especially greenfield and brownfield projects. Impressively, 97% of its profit are derived from gas reinjection technology, highlighting in its cost-effective innovation. Rich emphasized human capital investment led by the management team with the global oil and gas experience. It's also developed a central positioning facility with an LPG extraction unit. Although not currently active in M&A, Rich relies on strategic ownership partnership and adheres to international business ethics. On the other hand, Delium Berhad operates in 3 main segments: power and machinery, oilfield services, and corrosion solutions. It has a strong domestic presence and long-standing partnership with Petronas. Delium adopts a value-based pricing reflecting a service complexity. The company promotes itself as a single source provider and supports this positioning through R&D, including new sludge management chemicals. Its vertical integration ensures the operation efficiency, and its ESG efforts earned in the Global Gold Award at the Edge Malaysia ESG Awards 2023. Delium is fully compliant with the Competition Act and has a clean record of ethical conduct. Finally, Uzma Berhad is a technology-focused upstream service provider. It specializes in geoscience, reservoir engineered, and well services, offering a customized pricing based on complexity and value. Uzma maintains a strong client relationship by delivering innovative, environmentally friendly solutions. Its R&D division develops a digital and eco-conscious technologies to reduce environmental impacts and increase operational efficiency. Strategically, Uzma expanded through acquisition, notably increasing its stake in Sidgap Ventures Petroleum and acquiring Premier Enterprise Corporation. With growing involvement in regional and international energy projects, Uzma remains committed to ethical businesses, practices, and full compliance with the Competition Act. To conclude, each of these companies demonstrate a unique blend of strategic behaviors, combining a technology, sustainability, and ethical governance to remain resilient and competitive in Malaysia's dynamic upstream oil and gas sector. Thank you.
Hello everyone, my name is TASNIM. My matrix number is 292488. In this part, I will be discussing the financial performance of companies in Malaysia upstream oil and gas industry, specifically focusing on total sales or revenue and total assets. Over the past 10 years, the industry total revenue increased from approximately RM 5.2 billion in 2015 to RM 10.8 billion in 2024. Sapura Energy Berhad consistently held the highest revenue until 2024. However, Hibiscus Petroleum Berhad showed rapidly growth, eventually becoming the top revenue earner with RM 2.7 billion in 2024. Velestor and Delium also demonstrated steady performance, with Velestor revenue reaching RM 1.36 billion and Delium at around RM 907 million. The most notable shift is the declining market share of Sapura from over 70% in 2020 to just 39% in 2024. Meanwhile, Hibiscus gained substantial ground, now controlling 25% of the market. This shift indicates a more balanced competitive landscape, reducing overall market concentration and opening up opportunities for mid-sized firms. Now, looking at the total asset in 2024. Hibiscus Petroleum leads with asset worth approximately RM 6.6 billion, with Velestor Energy follows at RM 3.0 billion, and Uzma Berhad holds RM 1.52 billion, and Delium Berhad has RM 557 million. In the contrast, companies like Skomi and Barakah have much smaller asset bases at around RM 2 million and RM 141 million respectively. These comparisons show us that asset-heavy companies like Hibiscus and Velestor are leveraging their scale to compete more aggressively. However, high asset do not always mean high efficiency. Companies must maintain profitability, manage debt wisely, and adapt to industry volatility to remain competitive. To conclude, we observe that the industry is transitioning from the dominance by a single firm to a more competitive environment. With Hibiscus rising and Sapura restructuring, there is a dynamic shift in power. Track both revenue and asset trends help us understand which companies are financially strong and agile enough to sustain long-term growth in the upstream oil and gas sector.
ROE shows how well a company uses its money to make profit. It tells us if the company's management is doing a good job. Hibiscus did the best with a big increase of 861.3%. This means they made a lot more profit compared to before. Velestor also did very well with an increase of 175.3%, and T7 improved by 115.6%. Delium had a small but stable growth of 15.3%. Now, for the weaker companies, RIDH had the worst result, with a big drop of 4,515.4%. This shows how serious financial problems occur. Sapura dropped 173.5% and Barakah dropped 96.4%. USMA had a small decrease of 23.3% and SCOMI didn't make any profit at all. To conclude, companies like Hibiscus, Valesto, and T7 did well, while RIDH and Sapura are still struggling. ROA shows the profit a company makes from its assets. It tells us how much money is earned for every ringgit of assets the company owns. Hibiscus had the highest increase with a jump of 861.3%. This means they use their assets very well to make profit. Valesto also performed strongly with a 221.8% increase, and T7 improved by 67.2%. Dilium had a steady rise of 58.9% and USMA grew slightly by 5.7%, both showing stable growth. RIDH had the biggest drop with a decrease of 4,515.4%, which shows major losses. Sapura also dropped by 218.2% and Baraka by 25.4%. SCOMI again had no profit, so their ROA is zero. In short, companies like Hibiscus, Valesto and T7 use their assets very well, while RIDH and Sapura need improvement.
To improve Malaysia's competitive edge in the upstream oil and gas sector, a joint effort between government and corporate players is essential. Firstly, the government should invest in research and development, especially in AI and clean energy solutions. Upgrading infrastructure like ports and offshore platforms will also reduce operational costs and improve efficiency. Secondly, policymakers must refine regulatory frameworks, making licensing processes smoother and offering fair tax incentives that encourage local investment and environmental responsibility. So companies adopting sustainable practices should receive additional support such as tax credits. Third, we must strengthen environmental policies by promoting technologies like carbon capture and storage, and implementing stricter emissions guidelines. Corporates, on the other hand, must align their strategies with ESG principles. Finally, by investing in human capital through training and forming strategic global partnerships, Malaysian companies can access cutting-edge technologies and expand globally, all while adhering to good governance and ethical business practices. In conclusion, Malaysia's upstream oil and gas industry remains a vital pillar of the national economy. It not only contributes significantly to government revenue, but also supports thousands of jobs and drives the development of related industries. With its favorable location and substantial hydrocarbon reserves, Malaysia is poised to continue as a key player in the Southeast Asian energy market. So this report has highlighted how 9 major companies, including Valesto, Hibiscus and Sapura, play critical roles across exploration, drilling and engineering support. Despite challenges such as volatile oil prices, stringent environmental demands, these companies are investing in technology, forming strategic partnerships and embracing diversification to stay competitive. As innovation, regulatory shifts and global energy trends shape the future, the success of Malaysia's upstream sector depends on its ability to adapt. Ultimately, collaboration between the government and private sector will be crucial in ensuring long-term sustainability and global relevance. Thank you.